Welcome to Is It Bad for the Economy, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. My name's Kobi Tirey. I'm a Democratic strategist trying to figure out how Democrats can finally get the credit they deserve for outperforming Republicans on the economy for my entire lifetime. And I'm joined by the anonymous financial practitioner, Banker Bill, who's doing some amazing work at a bank you've definitely heard of. Folks, if you're listening to this, we're doing another special video episode. We did one on the Kevin Warsh nomination a couple of weeks ago. It was an emergency pod, and that was so successful. We're going to try it again today for a main episode, but you probably already heard it right there first. There's going to be a few more flubs in this one as we can't edit it nearly as closely. But there are some big economic reports that came out this week. So Banker Bill, we got to dive right into them. First, the employment report. Really weird. On Monday, Kevin Hassett came on to TV. He really downplayed this one. He really wanted to set expectations low, and then we got it on Wednesday, a little late, but we got it, and it looked just fine, maybe even okay. I wanted to ask you about some of the theories first about why we thought that the Trump administration may have wanted to downplay this jobs report. The first one, are the numbers legit? Are we finally starting to see that Trump's attacks on the BLS are starting to erode the quality of the numbers? But before I get your opinion, it's important to note that the former BLS chief who was so unjustifiably fired by Trump, McIntyre, she says yes. She says that even though she's been fired, the numbers look good. She still trusts the people who work there. You've been saying the whole time, Banker Bill, you're going to keep trusting the numbers until you don't. You'll keep a close eye on it, but they're reliable again until we start getting some leaks or some really weird anomalies. Is that still the case? Are you still trusting these numbers?
Yes, I expect that for any irregularities in the data, people who look at the stuff closer to me are definitely going to pick it up. And then the people actually working in there, I expect there to be leaks. And from what I've seen in the data that's getting published, beyond with the inflation data they had put out with the zeros and whatnot, I mean, everything looks as you'd expect. It's all kosher to me.
The other theory was that this was another insider trading move, that they were trying to get the markets to move one way so they can make some trades on Tuesday, early on Wednesday before the markets opened, and then, reap the rewards once the numbers came in, once the adjustment was made. Do you think there's any truth to that?
I didn't see that, no. But unfortunately, there's a lot of that speculation now, as we've seen perhaps some of that activity several times over the last year.
The third theory was that they were trying to hide the 2025 annual number, which turned out to be really bad. After downward revisions, it was all the way down to 130,000 jobs created in 2025. I, from my biased point of view, of course, have to point out at this point that during the entire Biden administration, 16 million jobs were created. So once again, I think Democrats should get a little bit more credit for how they're doing on the economy. But do you think there's any credibility to that? Do you think that maybe the Trump administration really wanted us to look at the short-term numbers here instead of the long-term ones?
I'm not sure. I would say the issues with government surveying and calculations are well documented, including by this administration. There are variances and differences in something called the birth-death model, which is contributing to these adjustments, to these revisions. And until we get to the bottom of either adjusting the model or how the data is aggregated or obtained, I expect that we're going to see some revisions that may be outside the scope of what we'd expect. But like we talked about when McIntyre was fired, the standard deviations in the data series, they've actually gotten better over the years. And in the post-pandemic areas where we've seen, again, deterioration. So again, it's getting back to that and dedicating resources to, better government data, which again, core tenet of capitalism, freedom of information, good data.
So it sounds to me like you're not giving into any of the political speculation there, but we do need to just hit the Trump administration for once again kind of being hypocritical about these revisions when they were attacking the Biden administration.
Sure. I mean, yeah, that's yes. That's kind of how they even came to power, right? I think this was a good jobs report, a welcome relief for them after a year or so of not so good reports. U6 is up a half a point from a year ago, from 7.5% to 8%. That's not a great trend. But over the last 3 months, the U6 is actually down. It was 8.7, I think, there sometime in the fourth quarter. Right. So we're down from that top. But look, healthcare is the dominant sector for job growth. And if I were to lose my job right now, it's the industry I would look within, because I think it would give me the best chance at landing a new job. Other industries are lagging behind.
Another economic report that was looking pretty good after a pretty tepid year was the CPI report, the inflation report. It's all the way down to 2.4%. And folks, that is a good thing. It got up back to 2.9%. We don't want that. So that's a pretty big dip in terms of how much prices are going up, but it's still not back at that Fed rate, that Fed target of 2%. Again, I'm very critical of Trump. I'm going to never give him the benefit of the doubt on anything economically or otherwise, but getting all the way back down to 2.4% is a good thing. I do have to give two technical quibbles, though, of course. The first is that Fed Chair Powell this entire time has been saying that inflation would be back down to 2% if it weren't for the tariffs, and the tariffs are really far down. Even by our metric that we were using, they're a little bit over 11%. That was for November. We don't have a lot of numbers for December or January yet. We'd expect that to keep going down. There haven't been any big tariff announcements that have actually gone into effect in the last couple of months. Banker Bill's been predicting for a while now that we've already seen peak tariffs. So look, this is in part a taco moment. But the other thing I'd just say is that we're now back essentially to Liberation Day. It was 2.3% after the soft landing then, and now it's back down to 2.4%. I really hope this trend holds, Banker Bill. Do you think we're going to get down to 2% anytime soon?
Sure. I mean, it's good to see the inflation trending down again after trending back up for much of the spring and summer and then flat through the fall. But remember, the figure you cited, the 2.4, is CPI, okay? The whole basket. That's 2.4. We look at four measures of inflation. CPI, Consumer Price Index. CPI excluding food and energy. PCE, Personal Consumption Expenditures, the whole basket. And PCE excluding food and energy. PCE, CPI, they have different weightings, different baskets of goods. But look, you're getting like a kaleidoscope here, four different ways of looking at inflation. Good thing. The one you're referring to is the best measure. The worst one looks like it's about 2.8. So inflation is still running over the last 12 months between 2.4 and 2.8. Remains too high, remains comfortably above Fed target.
So even when I'm trying to give Trump a little credit, you're saying, nope, it's range bound.
Yeah, I guess the shoe's on the other foot here, huh?
That gets us to our next topic. There have been a couple of big economic stories that even we haven't gotten to as we've tried to do a deep dive on everything. There's been a lot about the crypto crash. There was a weird gold and silver boom and bust. Some people are even calling it a rug pull. And we have Trump's continued attempts to weaken the dollar for his trade policies. All in all, we're starting to hear a lot about whether the dollar is under threat, and that for us as the country that is able to issue the reserve currency of the world, that's a really, really, really big hit to our superpower status. But, I don't entirely know what that means. So, Banker Bill, I really wanted to talk this through with you. But first, a lot of people are talking about this reserve currency thing like it's the United States' superpower. If we were to describe it as a superpower, what superpowers is the dollar being the reserve currency of the world giving the United States? And why should I care about that?
Reserve currency sounds ivory tower. It is extremely important to the American way of life because it directly impacts our purchasing power. The power that we have to buy goods, to buy services, directly impacts interest rates and our own day-to-day economic stability. Without reserve currency power or status, for which there are sacrifices, don't get me wrong, we'd probably have even higher interest rates than we do right now. Imports might be higher than they are now. Inflation might be higher than it is now. We would not have the dominant say in transactions worldwide that we do.
So things would just get way, way more expensive if all of a sudden there was an alternative to the dollar?
Not necessarily way, way more, but we would have less control over that. Right now, it's the U.S. dollar on their shores, on someone else's shores. We get to name the terms of that game. We set the rules. It's the American banks, American financial institutions that are represented by Americans, right? It's Americans that belong to those institutions that have a say in how transactions move throughout the entire global economy.
So let's say the unimaginable happens and somebody else manages to actually provide an alternative to the dollar. What would we lose and how would I sort of feel that, in my wallet?
Likely higher interest rates, more expensive imports, potentially higher inflation, potentially less economic stability if the United States were suddenly no longer able to trade petrodollars, right? So trading directly oil for U.S. dollars, right? If the United States instead had to take U.S. dollars, transfer those into Chinese yuan, transfer that to get the oil, then bring the oil back in, obviously that would be a lot more expensive, right? Petrodollars exist for several national security and economic reasons. But one economic reason is to be able to directly transact for that U.S. dollar for a hard asset that is crude oil. Does that make sense?
It makes sense that there's just kind of two different ideas in there. And I think one sort of affects the average person a lot more than the other. I think the idea that there is some sort of trickle down improvement in prices for folks in which the baseline currency operates. That makes sense, right? Other people in other markets are having to make a lot more transactions where they're converting currencies, and a little bit's going to get shaved off the top every time.
And call that the grease.
Yeah.
Right? That's what we have that maybe someone else doesn't.
There's a lot less middlemen in our system.
Correct.
So that seems great. But the interest rate thing, like that's slightly different though, right? The idea that if all of a sudden our currency wasn't the reserve currency in the world, our debt would get a lot more expensive. All of a sudden those deficits, that debt that feel like they may or may not be imaginary when we're trying to figure out what we're going to pay for next year with the federal government, wouldn't that become really real really quick?
It could. I mean, one example, one scenario is the one in which you just described about transactions costs and how you can trade in US dollars basically anywhere in the world. Well, suppose that you couldn't, right? There are certain businesses, people, funds, sovereign money that then wouldn't want to or could not for some reason transact in US dollars. And so they would no longer buy debt. But most foreigners buy US debt because they hold dollars. So you go buy something overseas, you buy something in Germany. The German takes your US dollars. What do they do with them? They make them into euros? No, they take the dollars and they go buy US treasuries because you can buy treasuries in dollars. So now they hold a debt of the United States, right? That's a very simplified transaction, something that we're talking about.
So there would be no longer sort of institutional force at the bottom of the market incentivizing everybody to buy American debt all the time. So all of a sudden there might finally be that bond market where there are no takers.
In the extreme scenario, sure, that potentially could happen. If you saw a runaway in central banks trading dollars for gold, right? And there was basically a run on the dollar where everyone was looking to sell dollars in the open market. Hey, if you're trying to sell all these dollars, what's that going to happen to the value of it at that time? It's going to go down.
You mentioned we make some sacrifices by having the reserve currency in the world. And obviously, Trump wants a weak dollar, in large part because he wants to weaken that trade deficit along some of the lines you already mentioned. But what's Trump's angle here? Why is he willing to sort of go down that road a couple steps? Why does he think that's worth it?
I think it ties directly to their tariff strategy, where they simply want to reduce consumption in the United States and transition that into savings and investment and have less dollars leave the country. That's the objective. And as fewer dollars leave the country, ostensibly the dollar is going to gain in value because, as I just said about if everyone was trying to sell dollars and you put all the dollars on the market, the inverse is now happening. Right. So fewer dollars means the dollar is going to strengthen. So they're fighting against that with tariff policy, with a loose dollar policy that is disincentivizing dollars from leaving the United States and materializes itself as reduced trade deficits and a weaker dollar. And for the American consumer, an incentive to spend domestically rather than outside the U.S.
So this is all for domestic manufacturing?
That's the whole plan all along. They are trying to move the U.S. from a consumption economy back to an investment, more export-driven economy. It's obviously not working. I mean, we talked about the jobs. I mean, manufacturing jobs are a straight line down, right? Manufacturing jobs peaked for this cycle in 2023. His administration hasn't done anything to improve that. Nothing.
It did just occur to me that this story about do we even want manufacturing jobs again in the first place it sort of goes even much, much deeper than I realized when we've been doing some of those episodes.
It does. That's part of the dollar strategy too, is why I think a strong dollar is actually better, okay? Because the goods that we have in the U.S., what we sell, whether that is professional services in banking or Boeing aircraft or the soybeans that we have, okay? Those are all high value added goods in their respective services or in their respective industries, I could say. So the demand elasticity, the price people are willing to pay for those goods, no matter what, is higher because it's a better product. So having a strong dollar is better than having a weakening dollar where you're trying to convince yourself, oh, I'm selling myself to the rest of the world, right? The Chinese model where they'll just buy all of my production versus driving up the value chain and basically taking the currency, the value of your currency off the table as a chip. Because what you're offering to the market, your services, your products are so valuable that they wouldn't go anywhere else. They'll pay the premium.
The positives that Trump's trying to generate haven't manifested. But, do you think that he's going to continue to do significant more damage to the dollar? Do you think that he could sort of get us in the zone where reserve currency status could actually be threatened?
No, because reserve currency status threatened No. Is he going to continue on this? I think yes. He's a product of the 1980s. He is going to continue to pursue the same stuff he's talked about. Okay. That includes tariffs. That includes a weaker dollar policy. The Plaza Accord, which was about weakening the US dollar, right? Not to get into the details, that happened in 1985 at the Plaza Hotel in like New York, which was a campaign to weaken the US dollar relative to other currencies. So it would not shock me if that's where we're headed today. And it's possible that the way we get there is through this potential commingled relationship between a Fed and Treasury.
Yeah, I was about to ask, how is Trump weakening the dollar? How is he getting the price down?
Well, some of it is tariffs. Some of it is pure rhetoric. Some of it is just instability. It's a combination of several factors. And look, the dollar does fluctuate. So this is not a crisis. The dollar can certainly weaken a hell of a lot more from right here than where it is right now. It's only about 9 or 10% off on a trade-weighted basis since Inauguration Day. It can go a lot lower. But they don't want a strong dollar. They've never said that. They have actually just, the furthest they've gone is to say, oh, we want a stable dollar. Bessent said that several times, which is good too. I mean, who doesn't want a stable dollar? That's good for everybody. But you don't want the dollar to be used as a weapon. And the fear of the dollar being used as a weapon, I think, is part and parcel why there are central banks diversifying their holdings of reserves out of dollars and into gold. They're still holding a hell of a lot of dollars. Don't get me wrong, but it's less than it was. And there's no one there willing to take the trophy either, Kobi. Nobody wants to go be the reserve currency because there's sacrifices. I mean, the U.S. has to run to be reserve currency status. If the world GDP is going to grow at 3%, the U.S. basically has to run a structural deficit of 3% to fund money to the global market, right? The money has to grow with the production. So who's going to pay for it? Well, the U.S. holds the bag. So that's a sacrifice we have to make. There's pros and cons to it.
But how bad is it to hold the bag if everybody wants to buy our debt?
I would never stop holding the bag. Are you kidding me? I control it. It's my money on your shore.
When people talk about alternatives to the dollar, the first one is of course the OG, gold. We had this really, really weird run and then complete collapse of the gold and the silver market. Some of this talk of trying to find an alternative to the dollar was wrapped in there. It seemed like it was a lot of speculation, maybe even just a short-term hedge against some fears that people had about the U.S. economy. Can you tell us what you're thinking of that recent gold activity and whether you think that in the long term gold can ever really truly become an alternative to the dollar again?
I don't agree that we've had a crash in gold or silver. I mean, they significant run up and they've given up, I don't know, 10, 15%. Gold is over the last year is up something like 70, 80%. Outrageous. Can gold or any precious metal take over for the dollar? No, because you need a means to transact. Right. And that's what dollars do. Dollars give you that grease and liquidity that physical gold doesn't have. And the gold market's too small to handle the reserve currency status. There's not enough gold to go around. That makes it precious. Absolutely. It doesn't make it a good vehicle to trade for goods and services. I would say the same about silver. The reason for the run up maybe so much now is kind of because of financial derivatives, right? Options and futures and different contracts and ways to speculate on gold that are pushing and leaning on the price. And then it finally, the futures all get ahead of themselves. Finally, the derivatives get ahead of themselves versus the underlying actual physical gold. And you see a pullback. And that's what you've got. I mean, this has been building. I first told you about the foreign central banks acquiring gold, early on. It's basically in March when the first Liberation Day tariffs were announced.
Yeah, weren't you saying Poland was leading the pack?
Yes. And that's only on a reported basis. That's the money that they're reporting that we know about.
Speaking of countries we're not sure report all that much, the other big alternative that folks speak a lot about is a gold-backed Chinese currency. Before I get into that a little bit, though, I don't think I quite realized that we have two different words for the Chinese currency. I'm more familiar with yuan. There's a second one. Can you just explain to me why China has two different words for its money or two different names?
Okay, there's the renminbi, which is the onshore Chinese yuan, or we call it the renminbi. That's onshore. And then there's what I call the yuan, which is offshore. It's a dual currency system that there's an onshore price, an inside domestic China price, and an offshore price. And they say that that's designed to allow them to do trade while maintaining their ship capital controls. And that's something that, all Americans should know that I don't think they know. And when money goes into China, it's actually very hard to get money out of China. And money you make in China is hard to get out of China. And that's part and parcel, one of several reasons why China would never be the reserve currency.
So you think there's no chance, even though they're campaigning for it now, even though they made it official in 2024, that that is an objective of theirs?
I don't know that they want to be the one that has reserve currency status. I think that they are just looking to take some more market share away from the US to take some of that power, right? Some of the ability to transact, to not have to go through the dollar. Kobi, something like 90% of all foreign exchange transactions have a dollar touch. That means if you want to go from Thai baht to Vietnamese dong, very difficult, or I should say more challenging than going from Thai baht to US dollar to Vietnamese dong. Because the dollar is the one that has the liquidity for the baht and the dong, right? It's the dollar that has that broad depth, the scope, right? I could do $100 that way. I could do $10 million that way. I can't necessarily do that with Chinese yuan.
Are you concerned at all about these talks of massive sell-offs from China or intentions of sell-offs? And we've also heard about some sell-offs of American debt from some other countries too, like Japan.
Look, it's not a good look. Does it have an impact on the margins? Maybe. Does it have any immediate or intermediate impact? No. I mean, anyone that has U.S. Treasuries in size who wants to move them can't move them in size, because even though the market is so liquid, sure they could, but it would move the market. And people would sniff it out, and they would move price if for no other reason than because you are selling not for economic reasons, but for political reasons, right? Or national security reasons, right? So I would charge you more. Hey, China wants to sell all of its holdings off. I'm going to make China pay for it in a way that I'm not going to give them a good price. How badly do they want out? And so I think to the extent you do see diversification away from U.S. Treasuries and into gold, these central banks, especially, I think, try to do it quietly. And they're only reporting what they absolutely have, and it's in a press release and, very ho-hum. To answer your direct question, there's no way in hell anybody's going to wake up and say, you know what, screw the Americans. We're going to dump all their treasuries out. No, you can't, because it's not cutting off your nose to spite your face. A country like China or Japan would be poking themselves in both eyes and making themselves blind. So,
well, if any one given country isn't going to earn the trust or the financial superpower in the short term to provide an alternative to the dollar, there is, of course, one nation stateless option, and that is cryptocurrency, that is Bitcoin. It's crashing too, and I think it's really surprising that it's crashing not just because of the juxtaposition to the dollar and the entire point that it's supposed to be this hedge, also just because we've experienced an almost year of aggressive deregulation of cryptocurrencies and of financial institutional support buoying them from the bottom up. We've been joking for a very long time, only half joking, that anybody who's into cryptocurrency is anti-American for all the reasons that we've stated. But I think the weirdest thing is that the crypto culture, the way in which it's become used, has become so antithetical to this idea that it would be a Fedless currency with the ETFs and the index funds and the stable coins. Am I right in kind of saying, look, if they're going to treat it like a real government-backed, institution-backed currency, it is just a fad, it is just a speculative commodity, I can completely ignore it? Or is this how it becomes the new dollar? Is it with these hybrid institutional support? Is it because it becomes legitimized by a little bit of government backing?
No, I think this legitimization is perhaps why you're seeing the broad-based sell-off is once this got financialized with all these derivatives, whether they be options that happened years ago, ETFs, levered ETFs, right? So doubling, tripling down on the returns. So basically gambling, that made the actual Bitcoin maybe less valuable. And maybe part of it too is one of Bitcoin's selling points was mass inflation and, government nonstop spending. And while that has happened over the last several years, don't get me wrong, the world hasn't ended. And all that Bitcoin you're holding is sitting right there, but your cost of living is up maybe 20%. So, Bitcoin doesn't give you it's like gold, right? It doesn't give you any yield. It pays you no interest, doesn't generate any revenue for you, right? You could tell me all about yield maxing, whatever bullshit scam they got running to separate someone who doesn't know what they're doing from their money, but none of that means much to me. I think it's a good thing that we're seeing perhaps money come out of cryptocurrencies, out of Bitcoin, out of software, companies and speculative assets, asset classes, and moving into things that fall on your foot, like industrials or energy sector. I think that's good. I don't know if you know, Kobe, but the year to date, the broader, I think it's the Russell 3000 is actually outperforming the S&P.
You've made an incredibly compelling case that there isn't going to be a reserve currency alternative to the dollar anytime.
Do you think? I think I might have been a little confusing.
But, so we're not going to fall off the cliff. But, this is an incremental issue. This isn't an either or issue. It's not that we're safe as long as we have reserve status and we have nothing to lose by a weakening dollar until we finally fall off that cliff. What's going to happen here in the short term? And how much should we weigh the strength of the dollar in our calculus as voters basing our vote off the economy? Which is just a really complicated way of asking, should we care about the strength of the dollar in the same way that we care about the unemployment and the inflation numbers?
I think you care about them sort of one and the same. Day to day, nobody should be looking up what the U.S. dollar versus the euro is. I guess they're going on a vacation. But countries with very weak currencies, with wide gyrating currencies, they don't seem to be typically well off, or rich countries. So to the extent that these things, I think with currency fluctuations, they manifest themselves in uncertainty, and uncertainty has a cost. And if we're willing to cede some of that to other countries or to something like gold, we will pay a price for that by way of higher uncertainty, and with it, therefore, higher interest rates.
Chaos is inflationary.
It is. It always has been.
Speaking of chaos, there have been some incredibly significant resignations in financially related DOJ offices since the last episode. It seems like it's a really great time to do some white collar crime.
Oh my God, I think there's no better time. There basically is no antitrust enforcement at the Department of Justice at this point. It's over. The person who was there, Gail Slater, she was second to only Rubio in terms of confirmation votes. She was confirmed 78-19 to be the Assistant Attorney General for antitrust. She's out. She lasted 11 months. I think the DOJ is an absolute joke, and they can't maintain even a facade of credibility. If completely dubious and untrustworthy stuff has come from the Office of the Attorney General, this stuff at the Antitrust Division, United States attorneys, with the grand jury stuff with the Federal Reserve. I can tell you, other people will tell you, and I don't think I'm breaking news. Companies are hiring lawyers and influence peddlers to bolster their either MAGA or close to Trump credentials and pervert traditional law enforcement. It's open season. Do whatever you want. How big of a check do you have to write? That's all that matters. And you could do whatever you want. You want to merge, buy, just write the check. Who do you have to serve? Who do you have to know? That's all it is. It doesn't matter if it makes sense. It actually makes things very easy because you don't have to make good arguments. You don't have to justify anything. All you got to say is, I want to do it. Okay. How much cash you got? Enough. Okay. Leave the check. It makes the job very easily.
It sounds like a good time to remind folks that Teddy Roosevelt's proverbial big stick wasn't just swung around against our enemies abroad, but also against the trusts at home.
Kobe, listen to this. Antitrust Division, okay? The head of antitrust, she's out. The number 2, the Deputy Assistant Attorney General for antitrust, he's out. He had replaced somebody else who only lasted a few months in the job. Okay, so now they're on a third person for that role. The head of merger enforcement for the Antitrust Division, also out. So the Antitrust Division has been decapitated. I mean, you might as well take the sign off the door. I don't even know who's working there at this point. Who's in charge? They got nobody.
I guess we'll end it there. Thank you so much, everybody, for listening to another episode of Is It Bad for Economy? Thank you to those who watched it as we try out this new format. You'll be seeing me live, and you'll be seeing Banker Bill behind an animation that I'm frankly way too proud of. If you want to drop us a review on Apple or Spotify, please do. That's the best way that we can reach new folks. And if you want to check out the video, go to our YouTube, Is It Bad for the Economy, or our Substack, where we're trying to get everything together all at once. You can reach it at just isitbadfortheeconomy.com. If you have any questions, if you want to come on the show, email us at isitbadfortheeconomy@gmail.com. Thank you so much for joining us, and we'll probably do a longer episode next time again.